You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back here on the network one final time for your broadcast week, at least for all you on-demand folks. For your pro folks, of course, we'll be coming back a little bit later for Options Oddities. For all you podcast folks, this is your final show for the week. Yes, it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, OptionsInsider.com, as well as from the network upon which so many of you are binging. If my voice sounds a little off, I think I'm coming down with something. Listen, I'm fighting it. I'm fighting the good fight so you folks can continue to get all of the content you want, nay, you demand, throughout the week. So we're fighting the good fight on your behalf, listeners. If you want to join that good fight, if you like what you hear, throw some stars, a like, a comment, whatever you feel is appropriate at the end of the day. It does help new people continue to discover the content. Volview's getting a lot of love these days as well. A lot of people, I think, coming to the world of options and then graduating to a show like Volviews, and this whole new world opens up to them. Crazy products that erode and explode and all sorts of fun. So if you want to keep that fun partay rolling, throw a rating, a comment, a review. Of course, if you want to go above and beyond, you don't want your broadcast week to end with Volatility Views. You want to come back for some Options Oddities fun. And boy, will there be some fun to break down on the show today. Should be a good one. Only one place to get all things Options Oddities, as well as our great pro Q&As. Just had another great one this week with our buddy, Mr. Rich Excel. We touched on vol as well as just about every asset class under the sun on that one. That was a very far-reaching pro Q&A. You guys can get access to all of that, theoptionsinsider.com/pro, the place to go as we go around the horn, see who's joining us on the old Volatility Views program today. First, let's go out to the dark, the stormy, some might say terrifying. Some might ask, who would live in this hellish landscape known as the shores of Maine? Well, there's only one person. He sits alone in his compound atop his tower with his rifle in hand for the clam pirates. He is the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How go things on the terrifying shores of Maine?
They are terrifying. The tide is high. Isn't that that's a Blondie song? I think. Well, I am dating myself there. But anyway, it's a little terrifying. But I have to say this market is getting terrifyingly close to 4,600 if we haven't got there already.
Yes, a lot of terrifying things to unpack. And when you're thinking of a terrifying show, only one people. Easy for me to say. I'm getting wonky on all this cold medicine I'm taking. Only one person can join us to help break down all the terrifying madness in the vol market today. Yes, we are joined once again by our volatility man about town. He goes to all the conferences around the world, so you don't have to. He is the once and future Dr. Vix, Mr. Russell Rhoads. Mr. Rhoads, welcome back to Volatility Views. How goes your globe-trotting extravaganza, sir?
My globe trotting goes well. I think I'm home. No, I'm not. No, I'm not. I thought I was home for the rest of the year, but I'm not. I just looked over at my calendar. So a little bit more globetrotting, but nothing very exciting from the last trip. More personal stuff that I'll tell you offline than actionable information. How's that?
Oh, we love all the personal info, listeners, as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is trading out there. Remember, no Vol Views last week. We were off for the Thanksgiving holiday break, so we're going back 2 weeks for all of these numbers we're talking about here in terms of the changes and everything like that. And as the Rock Lobster alluded to, on the rampage again to the upside, nearly 0.6% to the upside for the S&P, threatening the 4,600 level. The Dow up 0.75%, the NASDAQ up about 0.5%. And we were kind of looking red coming into the open, then everything has kind of just turned to the green now, off to the rampage. So much so that it's actually carrying products like UVIX back up with it. We need it to go back down. That's what we need. In fact, looking at our pro chat, everyone's saying hello in there, but Nyquil saying, it's final trading day of the week. Let's get it. I'm long UVIX 17 puts expiring today. Let's go. Yeah, I'm sure a lot of people got some UVIX in their back pocket for today. So let's go indeed. A lot of fun to be had out there on the vol market today. VIX cash, when we kicked off the show, back at the level that I've said before, kind of gives me the willies, gives me the heebie-jeebies. It's the 12 handle, 1270 to be precise, when we kicked off the show, down a little over one, about 1.15 points, again, from our last show, which was 2 weeks ago. So net, we haven't done a lot of living in the vol landscape in between, even though we know day-to-day a lot more has happened out there. VVIX, the vol of vols, at about an 86, up about 4 points from where it was this time 2 weeks ago. So a lot to unpack as we go around the horn. We will start with our guest, Mr. Rhoads. We'll get to all your VIX drama in a little bit on Twitter, and we'll get to some of the conference fun. But before we get to all that fun, what's catching your eye this week from an overall vol trades and trends perspective, sir?
Well, it's not a vol thing, but it's an important thing. Yesterday I was down in South Bend doing a presentation that's an outlook for 2024 in the markets, which nobody else wanted to do it, so I did it because everybody else is like, I don't even want to be, because it's going to be so difficult to be right. But one of the things that I really have been fixated on is the next, what's the Fed going to do and when they're going to do it next. And when I spoke yesterday morning, the derivative markets, according to the numbers off of Bloomberg, the first the first cut was going to be May 1st. Fast forward 24 hours later, and they've got a 63% chance now that we're going to get the first cut in March. And I rarely disagree with what the market is pricing in, but I just really do have a hell of a time seeing that. And I feel like the Fed speakers are trying to talk that stuff down, and nobody's listening to them.
Again, this cough medicine I'm taking, knocking me for a loop here. So what is our release schedule for non-farms, Mr. Rhoads?
We get it next week. We get it next. Sometime this happens every once in a while. If the first day of the month is on a Friday, and people that work in government don't like to work particularly hard, so they probably took the whole Thanksgiving week off one way or another, and need an extra week to calculate the November non-farm payroll estimate. We did get the ISM this morning, but I don't think that's what's gotten us going. I think what's got us going is it looks like we started to get moving after Powell talked. But if you read what Powell said and then you look at what the market did, you would think that he hadn't said anything. It's I'm very perplexed in this day and age. I want Andrew to get me on the right path here.
All right, listeners, when we need someone to get us on the right path, we always turn to the Rock Lobster. Mr. Rock Lobster, sir, the once and future Dr. Vix needs your help. Sounds like I need some more cold medicine. What are your thoughts on everything he's putting down here?
On vol, as in like, hey, let's look at vol. Is that what
instead of talking about interest rates like I did? But that's what the market's all about now. It really is.
I think the thing is, everybody keeps thinking Powell is going to lower rates, and he hasn't done it yet. He stopped raising them because we got to the target that he wanted. But, and this, maybe I know I see it sometimes, but maybe I'm the only one that just thinks this. But, Powell is trying to do one thing, but the federal government seems to be doing another. Like, I don't know how you could run a $2 trillion a year deficit and not, like, I think the bond market is running the rate show. And I don't think they're, I don't think the market is going to let the government run those kind of deficits and not demand interest for them. But we'll see. I could be totally wrong. I think the underlying economy is still running off of the post-COVID. Things were good before the COVID, and then everybody stopped working, and then they started working again. And then they flushed the whole thing with all this dough. So the fact that the economy is working is, it's just what it does. And it's been kind of doing that for 200, 300, 400 years, something like that. So the fact that, there could be economic growth, it's mostly, as a government, I think they kind of screw it up for the most part. Like the COVID thing, we could argue a lot of it, but probably wasn't necessary. But it happened, right? So now we're kind of extricating our way out, and people are finding their footing very slowly, right? We're basically, the market's unchanged for 2 years, give or take. We had that huge move, pretty good move down, wiped out all the gains from COVID in the Q stocks, and now we've regained all that again. So the thought that I think we're talking about rates is because now all of a sudden, I think, Russell, where you're right, Mike, not agreeing with what the numbers say is I think they're forgetting that the government is starting to do something that it really hasn't done, and that's spend an enormous amount. Like, you could say COVID was a reason. That's okay, valid, but in other times we were fighting wars in 2 different countries or something in the beginning of the 2000s. We're not doing that anymore. So you got to think, like, where's all this money going? I don't get any. So I think the interest rate thing is, I think this narrative is a strong thing. And just like other, like, let's say the internet bubble or the 2008 financial crisis or all these other things where, people kind of say, wow, these things are getting kind of pricey, right? But as long as everything is kind of good, nobody cares. And then all of a sudden, everybody started caring about real estate in 2008 and 2009. And then understanding there's some leverage in the system. And then, the dot-com boom, all of a sudden everybody cared that, wow, all these internet companies are priced at really high and they don't make any money. Not only that is they might not have a shot to make any money. So like in a history, where the history is filled with a lot of stuff. So we're at this kind of, I would just call, and I think this is why there's so much, kind of disconnected opinion is the U.S. economy probably working okay. It was working okay before COVID, working okay after, although you could argue that a little bit. But with the insane amount of spending that we're having, I think that's also helping keeping interest rates higher. I'm a Milton Friedman guy, and he's usually right. Inflation is a monetary thing. And I think that's like, because that's 2 very divergent paths. And I think that's why, everybody thinks we're just going to sell off or go to zero, because that government spending uncertainty path is still, it can be fixed, but it's not fixed yet. On the other hand, companies are kind of doing their thing. We're on the cusp of another revolution. I think AI will help a lot of businesses. So you've got on the one hand, you have this another leg of technology growth. Don't know how that's going to turn out, but usually they turn out okay. And then we got this government spending side because they're spending a lot of money and probably not getting a great return for it. And I think that's the divergence we find ourselves. So the bull case puts VIX at 12, right? That's generally where we go. I'm sure Russell has a zillion stats on this, but I think 12 is the mode handle for VIX because, mostly S&P 500 is in rally mode. It tends to settle there a little bit, with about 3 points above whatever vol risk premium or something like that. So it kind of settles there when volatility S&P 500 is around like 8%, So that's kind of where we are like all of a sudden. And it just got here surprisingly fast. And I think that's why there's that's why there's some unease because there's such a fast acceptance of how we got here. But it's, and Russell has the numbers, but the fact when we rally and we're near highs for the year, it should not be a surprise that VIX is 12. That's kind of how it works. I think a lot of people don't want it to be, but that's not going to make a difference. But I think that's and I still think like at this point, if we're not raising anymore, ultimately, I think that's bullish. But if he has to cut really fast because things are terrible, I don't think that's very good. So I'm more in the camp of, and I agree with Russell, I don't think he's cutting rates until the government stops spending money. And since I haven't seen the latter, I will stick to the former. So I think that's where we find ourselves. So yeah, we could still rally without any trouble because we haven't really in 2 years. So there's some pent up. But I think from a vol point of view, like VIX is where it should be with the S&P 500 where it is. And I think people, you know what? You just got to deal with it. You got to deal with where the market is. So I just said I don't fight the market going up because I've been watching it. When I started in this business, the Dow was 2,600. The Dow was 2,600, and it's 34,000 now or something like that. So you would have gone broke shorting it. And there we are. That's my riff for the day on this particular interest rate volatility subject.
Let's riff a little bit on some vol events, Mr. Rhoads. He's our man on the ground. He was down at RMC for us. He also went to London recently for a vol event. What was the event you went to, Mr. Rhoads? And any fun takeaways from our listeners, sir? Or should I say
it was a very high-end academic event, and I felt stupid. There was a lot to try and digest, and it really was very, very academically focused. And there was some math that I'm still trying to get my head around. So it's not good for this audience, but I will give you something that's good for this audience. We got a 1-year VIX and everybody's looking out to 2024. As of the end of November, the 1-year VIX is at the lowest level since 2018. And did we do okay in 2019? I think we did okay in 2019. But it's the lowest we've seen it in 5 years, looking forward to the next year. Of course, it was the highest we'd seen it at the end of November in 2021, and we had a really fun 2022. So you can take that for what it's worth. Since we want to talk about what volatility's thinking, volatility's got, and in fact, the 6-month VIX went out yesterday at 1791. And I'm still trying to dig through numbers, but I think that's the lowest it's been since 2017 or so, and the disconnect between the 6-month and the 1 year is about as wide as I've ever seen it. In fact, I almost want to go check the numbers to make sure I'm using the correct numbers. So that's it. My feeling is that all the action next year is going to come in the second half of the year, and I think that might be what the VIX curve is telling us as well. So there.
Speaking of what the VIX is telling us, sir, Had a little bit of a dust up, you and one of our buddies on the show, Mr. Jim Carroll. Not so much between you two, but looking at what the hell's going on in VIX land. Jim tweeted out, looks like a little chart of a little, I guess you can call it an intraday spike, a little minute blip of VIX. Looks like it spiked from a high 12 handle all the way up to looks like about 1430 or so. They came right back down. So one of those weird kind of aberrations that we see sometimes in VIX. He put it out there saying, hey, what the F is going on with this? And Mr. Rhoads saw the VIX bat signal and came to the rescue. What were your thoughts on this? I guess you can call it a weird blip, an aberration in VIX we saw this week, sir.
Well, we saw what Mark's talking about, and I'll retweet it. I can't type and talk like I used to be able to, so I'll retweet it right after and tag the Options Insider when I do that. But Jim pointed out that we got an intraday spike to the upside on VIX. And then it came right back down, which happens periodically. This used to happen a bit more than it does now. SIBO has put some mechanisms in place to try to smooth it out. But what happens is VIX is calculated every 15 seconds. And if right at that 15-second moment, somebody has done some sort of big trade where maybe they bought a strip of options, it's very possible that the market makers have widened out their spreads at the same time that we're calculating VIX. And VIX is not calculated using last option prices. It's calculated using the midpoint of the bid-ask spread. So if the spread widens out, there's a lot more room to the upside to widen a spread out than to the downside. So the pricing inputs for the VIX calculation get artificially inflated just as the market makers are trying to get themselves back in order. So that happens every once in a while. Somebody did point out on Twitter that it also occurred right before a big economic number, which could be, again, market makers getting out of the way for a short period of time. But that right there, and now I'm going to sound like I'm a shill for SIBO still, but that right there is why I tell everyone that uses VIX as an indicator, likes to keep an eye on it next to the S&P 500 or whatever, have the front month future up as well. And if you see something like VIX jumps a point or two out of nowhere and the future does not react, it's probably a bad tick and might save you from your heart skipping a beat or whatever.
Always a good bit of advice. If you're just looking at the cash, remember at the end of the day, this is calculated from something else. Something can go wonky sometimes. The future's always good to have in your back pocket for a rainy day. Speaking of the futures, let's get out there now, listeners. And coming into the start of the show, I know it's going to blow your mind, listeners, but the futures and indeed the curve all lower than it was 2 weeks ago. Coming into the start of the show, we had the DEES future, that front future, down a little over a point, right around 1.15 points from where it was 2 weeks ago. The Jan future, not quite a full point, almost 0.9 to the dark side. So come in for that front portion of the curve, but of course the whole curve settling in a bit as well. If we go all the way out, let's go out to August of next year, listeners. We're still shy of not even a 20 handle, a 19 handle. 1895 is about as high as we get out here on the curve right now. So again, looking like a nice, healthy, I think it was our guest a few weeks ago, Mr. Jim Carroll, Russell's little VIX Twitter buddy there, saying nice, healthy contango. It's still looking pretty contango-esque, to coin a phrase out there. Mr. Rock Lobster, what's catching your eye out there in the volatility surface this week?
Well, by our option pit calculation, it is like I would say pretty fairish. It's to just slightly rich from January out. The December is still pretty crushed relative because of the holiday time. It's been trading at a discount. The way I measure it for the last, for a while, months. So nothing really unusual there for when VIX is 1272 for the December future to be $1 over cash is pretty low historically. So this is a little lower than normal, I would say. It usually trades at a discount, but it feels like it was lower this time. And I don't know if it's probably a shortened month or something in there, or shortened time, because I think the future Actually, the December expires on the 20th, so I think it's a slightly later expiration. So I think that might be, it's like instead of the prior week, it's the week following. So that might be a reason. I don't know exactly, but usually it's always like a daily, some kind of a time anomaly that makes that trade like that. But everything else, Jan, Feb, March, all of those are basically where I expect them to be with, all the forward vols are kind of lining up like where they are kind of historically when VIX is in the 12s. Russell's saying more impact with Christmas and MLK expiration of the holidays. So I think, it's usually some days off basically is what it comes down to. It also makes, you would think, so generally when I look at it, the closer, good. So I guessed right. All right. So that's good. So
I'm just trying to see, nobody can see this, but I'm sending Andrew little notes because I've been fixated on that seasonal crap forever. And I'm just I'm feeding him words, and it sounds like we're having a conversation that people can't hear. I guess we are, but I'm just trying to help you out, Andrew.
I appreciate that. So it's basically saying there's holiday days, and it's accentuated by the slightly longer VIX expiration for Ds. So I was on the right path. So I feel
absolutely.
I feel good about that. It also, and so in my view, when futures get closer to cash, you want to look to buy calls in general if you're leaning one way or the other. So I'm not feeling any December call purchases. Actually, I just closed one today. I made like $20 on the trade. And I just closed it because of non-performance, essentially. I thought, okay, we've had this run. Let's say we get a little pop. No. So the, call buyers in VIX I'll just say, you want to see somebody who's not buying the G.I. Joe with a Kung Fu grip for 2023. It will be VIX call buyers in the December cycle, I would say. They are having not a good time, at least as of right now. So the curve looking kind of normalish except for the December anomaly and December call buyers. And thankful I got rid of everything I owned last month because it would have been a horror show because I believe the call buyers have been taken out to the woodshed and whooped.
I'm glad Andrew's shirt is going to say VIX Call Defense Force because he's the guy on here. He keeps tilting to that windmill every week for the upside calls. Usually it's part of a strangle, so you got something else to pay for it. So it's not like you're just buying calls willy-nilly. I don't want to give that impression. As addled as I am on cold medicine listeners, I don't want to deceive our listeners at the end of the day. But he is out. He's still swinging for the fences. One of these days, Mr. Rock Lobster, you're going to have it. We're going to have that nice pop. I won't say back to an 80 or even a 50 or a 60, but maybe to like a 32. And then, bam, you're going to be maybe not laughing all the way to the bank, but at least grinning down to the piggy bank down the hall, sir. What do you think?
Yes, our Gibson celebration on many fronts, maybe from 2023, Mr. Longo.
Yeah,
it will be long, and I'll have to deliver you back to the producer in a reduced condition after that celebration.
Well, it's going to be fueled by a lot of oat milk, but there'll be other fun in there as well. Maybe some UVIX fun. Maybe some VIX call fun for the Rock Lobster if he can come to grips with it. Speaking of providing people information, Mr. Rhoads, the Rock Lobster had a salient question. I know some of our listeners will have it as well, so why don't we just get it out of the way now? You were mentioning that 1 year VIX. He was curious about a symbol for that. I'm sure a lot of our listeners will be too. So where can they find the 1 year VIX you were talking about?
It's VIX, the number 1 and a Y.
Okay.
And I hate that ticker. Man, did I fight against that.
There you go. VIX 1Y listeners, if you're out there looking for 1 year VIX. Mr. Rhoads, any thoughts from you on the volatility surface this week, sir?
No, nothing. I mean, it's kind of what you would expect. A little bit of a dent in based on December. It did go away, I feel like, last Friday for a very short period of time, and then came right back when we got past the holiday and everything. I feel like when I did the weekend review that it was a very smooth looking curve, but yeah, you can see December at a $1.85 discount to January. Still a premium relative to spot. That's kind of interesting. If I wanted to be long volatility, I wouldn't look at the calls. I would actually give a thought to buying the D's contract and selling the January contract with how wide the spread is right now.
There you go, listeners. Maybe a future spread in your near future if you're not down with the Rock Lobster's upside call approach. But to each your own at the end of the day. Since we're talking about the VIX options, let's get out there, listeners. If you're wondering if today is a banger day on the VIX options front, the answer is not really. But then again, it's not terrible, especially when you consider that the ADV continues to drop. It is that time of year, listeners, just coming out of the holidays. Not a ton of paper flying. These markets kind of thin. VIX back down to around 708,000 contracts a day this week. That's down quite a bit from where it was this time last. I think 40-odd thousand contracts from where it was this time last week. And in terms of paper, not a banger day, 432,000. But then again, the ADV is only 708. I say only in air quotes. A lot of products would kill to have a 708,000 contract ADV. But VIX, as we know, was threatening 1 million a day not too long ago. So 432 today. So it seems like you might be on pace to hit that out there. Now, we are kind of popping hard, kind of giving up some of it now. But still, that aggressive upside. At the end of the day, vol is vol. Even if it's to the upside. I know a lot of people don't want to hear that, listeners. But especially all of our UVIX put holders out there in the chat. Let's break down some top 10 positions. And I know Mr. Rhoads is anxious to get rolling on his own personalized segment that we saved just for him with funky music. Well, let's start at number 10, as we are wont to do, listeners, in terms of the size positions that are open right now in VIX options. Number 10, 218,000. If you pay attention to VIX options, that's not small to break into the top 10. Usually you might see $1.50, $1.60, $1.80. 218, nothing to sneeze at. That gets us to the D's 25s. Number 9, 222,000 of the D's 20s. By the way, all calls all the time yet again this week, listeners. No puts to be found anywhere in our top 10. Number 8, 223,000 of the D's 45s. So now we're back to the fun stuff. Number 7, 225,000 of the Jan 28s. Number 6, 228,000 of the Jan 47 halves. I just love that one. That one brings a smile to my face. I'm not sure why. For some reason, the 45s weren't suitable for them, so they had to go to the 47 halves. Number 5, 260,000 of the Jan 25s. Number 4, the comparatively reasonable D's 18s. 269,000 of the D's 18s, again, for number 4. Maybe that's the Rock Lobster, piling into some D's 18s, listeners. A little bit small size for him. Number 3, 326,000 of the D's 40s, so right back up there again. Number 2, 326,000 of the Jan 26 calls. And the number 1 size position in VIX options right now, 343,000 of the D's 35s. Which of those, if any, is your favorite, listener? Which one would you like to have in your back pocket for a rainy day? I'm going to guess maybe the D's 18s, but hey, maybe you're a big fan of the Jan 47 halves. We don't judge here on the show, although we do judge Russell to see how good his segment is. So let's find out now. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
One more time, listeners.
Now, Russell's Weekly Rundown.
That's a fun one. All right, Mr. Rhoads, the table has been set for you. The feast is ready. Have at it, sir.
Andrew's gotten so used to it, he doesn't laugh at the end anymore. We wanted to add that, or maybe you heard us. Maybe you heard me making fun of your laugh at the end of it last time I was on.
I'd have to mute myself though, because I do start to giggle a little bit.
It is.
I don't want to be out of character.
And if you've never heard this one before, I played it for my kids like 5-10 years ago, and my oldest looked right at me and said, "I don't want to be associated with that." I always thought that was the best line ever.
She is a woman of discerning taste.
She is. She is. All right, Monday. When I grew up in Memphis, Monday night was wrestling night. If you wanted to fight somebody in high school, you said, "Let's go out to the flagpole Monday night, baby." But Monday in the morning, somebody sold 3,700 of the D's 6th, 15 puts for 105. VIX was at 1282. Why do I hate this trade? Because the break even is 1295. And I don't know. I just would not sell an option, and I might be dead wrong. We may be above 15 on December 6th, and everybody's happy here. But I like to look at shorter dated trades like this relative to the spot, not necessarily the future. And Spot VIX was at 1282 when this trade went off. The break even on this trade was 1295. Now I know that's just 13 cents, but that's not a huge, it's still something that it's one of my little trade rules that I try to avoid. Tuesday, somebody bought, looking out at December 13th expiration, somebody bought 100 of the December 13th 14 puts for 89 cents and sold 100 of the 12.5 puts for 13 cents. Got a net cost here of 76 cents. VIX was at 1287 at the time. The break even for this trade is 1324. So for that trade, if you just bought the puts outright, I think maybe, even if you just bought the puts outright, the break even is higher than where spot VIX was at the time. The maximum profit on this one, if VIX is at or below 1250 and it's held to expiration, is 74 cents. That's a bearish one. There are some bullish trades. Andrew said he didn't see a lot of bullish trades. I've seen a handful targeting the 6th and the 13th. I did see, I saw several targeting the 6th and the 13th and skipping the 20th. That may just be because the 20th is so close to the holiday, and maybe they're getting a little bit more love for the nearer expirations. But also on Tuesday, somebody bought 120 of the D6 18 calls for 11 cents. And they sold 120 of the D6 24 calls for 4 cents each. Net cost is 7 cents. Break even is 1807. VIX was at 1264 at the time. Monday morning quarterbacking is so easy. Why would you sell the 24 calls for just 4 cents? If you start to get some sort of volatility spike, you probably could have gotten more than 4 cents for those calls. So I know my boss at SIBO used to say, don't ever leg into spreads, but I'm going to ignore that advice. Wednesday, another bullish trade. Somebody bought 100 of the D13th 13 calls for $1.32, lots of 13s in there. And they sold 100 of the D13 1450 calls at 70 cents. Net cost on this was 52 cents. Checking my math. 63 cents. Sorry, 62 cents. So I've now caught the cold from Mark and can't do math. But yeah, 62 cent cost on that. VIX was at 1301 when this trade went off. So they got to get up to around 1363 to break even on this one. Thursday, just a straight call buy, did in a few lots. Somebody bought 500 of the D6 13.5 calls for 60 cents when VIX was at 1321. And then somebody came in, and I saw this trade in multiple versions. But Thursday, when VIX was a bit higher, when it was up around 1290 or so, somebody sold 1,650 of the D16th 1350 puts for 49 cents. This is an average trade with a lot of different prices in it. They purchased the D6 12.5 puts for 7 cents. They took in income of 42 cents, which is the profit on this trade if VIX is above 13.5 at next week's weekly expiration. Today, when I checked about an hour ago, there was only one trade using weekly options that was over 100 contracts. That's kind of the breakout I use. Somebody bought 100 of the D13th 15 calls like 5 minutes into the trading day, and I lost my underlying VIX price at that time. But I can tell you it was somewhere between 1296 and 1248 because that's the high and low today, which helps no one.
Look at you putting that Bloomberg to work, sir. Why did you disparage my call sale for 4 cents? What, you don't like that? You think that's not a good trade?
If I'm going to do something like that, in fact, I'm working on some systematic stuff using V-stocks in a white paper right now. And I skip selling anything. I have some systematic approaches, and I just don't sell an option if I can't get at least a dime for it.
As loopy as I am on cold mess, I don't think even I would hit a bid on that one right there. 4 cents? What are you doing? No, thank you. Let's see instead what people were up to in the big VIX mothership options this week, listeners. Like we said today, not exactly a banger. 432,000 contracts on the tape. The big dog, though, actually a decent size, most active. We got 51,000 of the D's 13 puts. So some puts making it onto the list, even if not breaking into our top 10 yet again this week. Number 2, right behind it, 50,000 of the Feb 20s. And then 50,000 as well of the Feb 40s. Looks like we might have a Feb 2040 vertical going up out there. Let me just see if I can check really quickly if my machine will work with me here, listeners. Yeah, looks like a Feb 2040 vertical going up for $1.45 on the 20 calls. Paper buying those and selling the 40 calls for 42 cents. We're buying that for $1.03. You like that, listeners? All the way out to February, 20 handles of upside for $1.03. Interesting. We don't see a lot of. We see other funky stuff. We don't see straight verticals that often in VIX. We see, the ratios and the 1x2s and 1x3s and all that kind of stuff. But straight verticals for size, don't see those too often. Interesting. Feb 2040. I like that better than selling the 24s for 4 cents, whatever those were there. So, yeah, there we go. That's why we have any paper today, listeners. This spread went up pretty much about 100,000 contracts. After that, it falls off a cliff, 18,000 for number 4 of the D's 14 puts. And rounding out the top 5, 15,000 of the D's 21s. Before I keep rolling, Mr. Rhoads, what are your thoughts on that Feb 2040 for $1.03, sir? You like it? You a buyer? Are you sold to you?
I like it.
Yeah, I don't hate that either. That one kind of left out of me.
And I like it for a lot of reasons. That trade's going to work out if they don't. And I know this is a February trade, but if all of a sudden the odds drop and it looks like we're not going to get a rate cut in the first half of the year, that trade's going to do beautifully because the stock market is really hanging its hat on lower interest rates 4 months out now.
Yeah, I got to say that one kind of leapt off the page to me as well. I don't hate that. So I'm not usually a fan of longer term stuff, but that isn't that far. It's only out. February may sound like a long time away, but it actually isn't that far. It's not the equivalent of what we were talking about when you had that pro question. It was like going out 6 months, I think. It's not quite that. It's not bad. 20 points of upside for $1.03. There we go. Kind of like that one. You like that one, listeners? $1.03, 20 handle vertical. Let's see. And rounding out the top 5 today, 15,000 of the D's 21. So back to some upside. Yesterday, a little bit more paper on the tape, 702,000. So just barely making, or actually a little bit below the ADV. The big dog yesterday, though, another big print, 75,000 of the Jan 18s. So people like the 18 strike again. We're talking about the D's 18s in our top size positions. Now, 75,000 of the Jan 18s going up yesterday. Followed by number 2, 63,000 of the Jan 16s. Number 3, 62,000 of the Feb 20. So back to this Feb 20 strike that's getting, obviously, some imagination out there. Number 4, 41,000 of the Jan 23s. And rounding out the top 5 yesterday, 35,000 of the Jan 16 puts. Wednesday seems to be the biggest day of the week, at least so far. Obviously, today not done. Nearly 800,000 contracts on the tape, 798 to be precise. The big print on Wednesday, 109,000 of the Jan 25s. So back to the upside game, listeners. Number 2, 90,000 of the Jan 23s. Number 3, 77,000 of the Jan 17s. Number 4, 38,000 of the Jan 13 puts. And rounding out the top 5 on Wednesday, 31,000 of the Jan 12 puts. Tuesday, 717,000 on the tape. The big dog, 60,000 of the April 47. The fascination with this 47.5 strike eludes me. I get people going to round numbers, 40, 50, 45. 47.5 just seems like a weird choice. But there we go. Once again, paper flock into a 47.5 strike, this time 60,000 times in April. Number 2, 32,000 of the Jan 45s. There we go. Much more round and sensible strike. Number 3, 30,000 of the Jan 22s. Number 4, 26,000 of the D's 13 half puts. And rounding out the top 5 today, 24,000 of the D's 18s. Monday, the weakest day of the week. 407,000 contracts on the tape. We're pretty much past that already today, listeners. 30,000 was the most active contract. That was the Jan 14 puts, followed by number 2, 19,000 of the D's 14 puts. Number 3, 18,000 of the Jan 25s. Number 4, 18,000 of the the D's 18s. And rounding out the top 5 on a pretty weak Monday, 17,000 of the May doubles, the May 55s. Haven't seen a double strike go up in a while, let alone out to May. Mr. Rock Lobster, anything catching your eye out here in the VIX options this week? And what are your thoughts on that size Feb 2040 for $1.03? You like it or are you sold to you?
No, you know what I was looking at? I kind of like, I like buying those long-term spreads in VIX. They don't decay, like, so if you're going to do anything like that, those spreads, like the decay on them is 0. Now they don't do anything unless VIX really blows up, but you don't pay a big penalty, for buying those spreads. And I love VIX call spreads for $1 or less. That's kind of my magic number when looking for stuff. I don't like spending big dough on VIX options because that also tells me that likely I'm buying vol too high and it's just all going to wither and die on me. So I like trades that are in the dollar range in VIX because little $1 options tend to grow into big options. So anytime, you could and that's what I think spreading works well on this product because it gets your entry price really low. So will they have a shot to sell that spread higher? I think I agree with those. Probably likely. You could be watching some paint dry in the short term, but at least the decay is like pennies a week, so not that big a deal.
Yeah, I was giving you a hard time earlier for your VIX upside love, but that one I don't hate as much as some of the others for a lot of the reasons you just laid down. Maybe a product you love, maybe a product you hate, listeners, is SVIX. About 34.80 when we kicked off the show. Still hanging out around there, up a little over 2, about 2.3 points from our last show a couple of weeks ago. Not lighting up the world today, only 2,000 contracts on the tape. Not lighting up the world in general. The ADV coming back down. It's back below 4,000 again. It's down to about 3,100 a day. That's down another 700 from our last show. So, again, it is that time of year, but a lot of people, I think, were hoping for SVIX to maybe get a little bit more action out there on the options front. And a lot was going on. Mr. Rhoads, the last time you joined us on the show, you kind of opened up a whole can of worms about SVIX changing their holdings. Of course, SVIX traditionally utilizes the futures, listeners, to approximate their inverse VIX product. They added a caveat that they were going to start potentially utilizing the options. A lot of us here, for obvious reasons, assumed they were going to be the VIX puts. But Russell did mention on the show last time he was on, there's no certainty for that. And a lot of you, second the show hit, a lot of you wrote in saying, look, it's not the puts, it's the calls. And yeah, so we saw that. And a lot of you have been watching this as well. It's kind of become a little bit of a de facto sport, if you will, out there amongst VolTwit of watching what the hell SVIX is up to with their holdings. They had the D's 27s. It seemed like they bailed on them. And then now it seems like they are back into them again. In fact, the most recent data as of this morning shows about 29,500 of the D's 27s back in their holdings, along with some Jan and D's futures out there. So kind of interesting. I was kind of surprised, like a lot of people, Russell, to see that they were calls, and then B, that they did seem to get out of them and then get back in. So I know you've been watching this. I know you've been corresponding with a lot of folks out there on VolTwit about this issue. Got a lot of people all up in a tizzy out there. What are your thoughts on this evolution we're seeing in SVIX, sir? Well,
first, they never got out of them. I don't know, because I have like the daily data, and I think it was just a mistake on filing one time, because that position has done nothing but grow.
Okay, I was going to say that makes no sense why they would get out and get back into the same thing.
And the position has grown. It's funny. I wasn't even thinking about talking about this today. I was actually just, for curiosity's sake, looking at it. But another one of the beautiful things about my Bloomberg is it gives you the daily holdings of active ETFs. So you can go backwards and see when they bought and sold stuff. And they started out on the 14th. I think on the 13th, they bought 15,400 of the D's 27 calls. And it's really funny, when they did that, I was over in London. I was actually talking to a VIX V-Stocks trader, and he said people were mirroring what they did after they saw what they did. They're not doing. And then I had people ask me, well, are they doing this? Are they thinking it's going up? Blah, blah, blah. No, it's a passively managed account, and they do have to have some risk controls in place. And it's really a risk controlled thing more than anything else. And I think it's a risk control thing that might be associated with the fund being a bigger and bigger portion of VIX futures trading, that they don't want to end up with some sort of a liquidity problem. But they bought the 15.4, And then they took it up to 28, and then they took it up to 29.5, which is where they are now. And those purchases coincide with inflows. So basically, when the two times, the first time they did what they said they were going to do, the two times they've increased the position has matched up with flows. So it's almost just a rebalancing and not some sort of super bearish opinion now on what might happen in the VIX market.
It does seem like this has been a polarizing move, and I'm glad you clarified that, because when the people were hitting us up saying, look, they closed out the calls, that made no sense to me. I didn't know why they would close them out and then come back in with the exact same position for more size. So I'm glad you clarified that for our listeners out there. People are definitely of two minds on this. I kind of come down like you, that I think this is Volmageddon protection, which I don't hate at the end of the day. We kind of discussed this when you were on the show last. Again, there's open questions whether how this will impact the tracking of SVIX and all that kind of fun. So that's still an open question there. So I can see why people are on the fence about this. But in just hey, maybe it won't go the way of the dodo if another February of 2018 rolls around, I don't hate it. Mr. Rock Lobster, have you been following all this SVIX drama with the options? And I don't think you and I have had a chance to talk about this. What are your thoughts? Do you like it with the options now as a bit of a kicker or perhaps catastrophe insurance? Or do you think maybe it somehow spoils the product a little bit?
I mean, I guess it's one of those things where time will tell. I don't think having them trade the options is a terrible thing. I think there's liquidity one way, liquidity the other way. I don't think it's a terrible thing. It also reduces the squeeze factor on the fund manager. Because I remember doing some consulting for a firm once because they didn't want to keep increasing their future exposure, or they had a future trade on. And they just wanted to adjust kind of the blow up delta around the middle, so to speak. So they could buy some junk options and help alleviate some risk. So I don't think it's a bad thing. And they could hand a lot of that risk off to the market makers that sell them the options, which is what they're made for.
All right, so Rhoads, I know you want to add one more thing, then we'll get rolling to
sure.
Crystal
Yeah,
Ball.
I was just going to say, I never shut the heck up about SVIX, and I talk about how much I like the product and how it's something that I always have a position on, and I trade options around it. I'll tell you, I feel a hell of a lot better knowing they own those calls.
Yeah, if you're going to rock the underlying, yeah.
And then the other part of it is, why would I hedge my position now if they've got a really nice hedge on?
There you go, saving you the money.
So there, if you buy puts, you're double hedged.
It was a very consumer-friendly decision. It kind of reminds me of some of the early days of Tesla on this network, when people were writing into us saying, I don't know if this thing's going to be around very long. Should I buy whatever it was at the time, the Model S, and then some puts? That was the conversation everybody had, but they were kind of trying to self-insure Tesla going the way of the dodo. Now you don't have to do that with SVIX, listeners. It's done for you.
I believe SVIX is creating like little funky back spreads, little strangles. So a product manager is going to the dark side, but I think probably better for the product, to be quite honest.
Are you saying because they're going to bid up this upside now going forward?
Well, now we know who's buying the 2040 spreads in February.
Could very well be. So it's not like there's a shortage of demand for VIX upside, but maybe SVIX adding to that partay. So there you go, listeners. A lot to unpack. As we keep on rolling, it's that time, listeners. We can no longer avoid it. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Before we get there really quickly, we didn't get the chance to hit all of our products. Not much going up in VXX. It was at about a 1720 when we kicked off the show. Down about 1.5 points and not a ton of paper lighting it up. You guys know the deal with UVIX. We had our listener at the top of the show, so he's rocking the 17 put, so he's hoping for a 17 handle. It keeps bouncing off that, it seems like today. Looks like it broke it briefly, hanging out around 17.25 when we kicked off the show. Still hanging out right around there. That puts it down about 3 points. Decent paper today, actually, about 10,000. That's better than the ADV of about 8,600, so maybe UVIX can continue to grow in some liquidity, and we can maybe get shocker more options out there. How cool would that be? So intriguing stuff out there. But now it's time, listeners, to get to the most difficult, the most dangerous portion of the show. It is time for the crystal ball. And last show we had an unenviable task, listeners, because it's difficult enough if you played this game for any amount of time with us on the show. It's difficult enough to predict vol 1 week out. We had to go all the way out 2 weeks through a holiday, through a long weekend. You never know what the hell's going to go on there. So that was a very challenging thing. Coming into the end of the show, we have VIX right around a 1270 right now, listeners. So that would actually put me as the closest, but still no winner chicken dinner. I was feeling a 13 handle. Some of that might just be reflexive. I kind of thought we might be a little lower, but I couldn't will the 12 handle into existence by predicting it here. So I kept myself at a 13 and a quarter. If I had gone a little lower, maybe a winner chicken dinner for me. Mr. Meatball at his palindromic nonsense of 1331, so not that far behind me. And then we had our Mr. Rock Lobster, I should say Mr. Rhoads' buddy on there on Twitter, Mr. Jim Carroll, Vixologist. He was at a 1441. He was playing the palindromic nonsense game as well, and no joy there. Our producers will go through all of the listener guesses. I don't see any 12 handles, though, listeners, off the top of my head. So I see a lot of 14 and 13, some 18 handles. Someone was really feeling it. So no joy there. That means no winner chicken dinner this week. That means our guest gets the dubious honor of going first. Mr. Rhoads, sir, what are you feeling this time for our usual prognostication window of just 1 week, sir?
11.99.
Oh.
I'm going for it.
You're saying it.
It's going to get everybody excited.
You're speaking it into fruition. I don't know. I don't like a 12 handle. I get more nervous at 11.99, but
I would be thrilled so I can buy all kinds of SPX
I'd
plays.
say you'd be thrilled on that. You'd be thrilled on getting maybe called away on your SVIX calls. A lot of things would be going on for you if we hit 11.99. Mr. Rock Lobster, same question for you, sir. What are you feeling for this time next week?
Wow, he is feeling remarkably bearish on the VIX. I think a little seasonality, a little this, a little that. I definitely think we're lower. I'm not as bearish as Russell. Although I would be thrilled to death if he was correct. I'm going to say 12. I'll say 12.49.
All right, 12.49 for the Rock Lobster. And as I wrote, as he was speaking, so no one can accuse me of scumming him, I wrote 12.35 for myself, listeners. So kind of a tight range this week. That's going to happen when we're getting down into almost threatening single digits in VIX. Things are going to get a little bit tighter. 12.49 for the upside with the Rock Lobster. 12.35 for me, Goldilocks there in the middle, a.k.a. the right prognostication. And then Mr. Rhoads feeling a little bit of dark side, 11.99. All right, that music means we've come to the end of the Volatility Views program. For all of you out there on the on-demand side, that will conclude your broadcast week with us. Thank you for joining us throughout the week. Remember, if you missed anything, it's all available there. 17 years almost worth of content on that network feed, so a lot you can binge. If you missed anything over that time, it's all there for you. And of course, if you want to go above and beyond, you don't want your broadcast week to end with Volatility Views. You want to come back for a little bit of options oddities. I heard you might get a Rock Lobster road trip on the episode today, so it should be all sorts of fun. Come on back in a little bit. You can check out theoptionsinsider.com/pro. That will show you all the details of how you can join us there for all the fun. You too can participate in the Gibson's extravaganza that we have, fueled by Oatly and UVIX and VIX and all sorts of other fun on that show, listeners. But before we go, let's go back around the horn. Let's start with the once and future Dr. VIX. Mr. Rhoads, if folks want to keep up with your vol musings, where should they go? What should they do?
Follow me on the Twitter, on the X, and I'm still on there. Although I did cancel my Disney Plus subscription today. And beyond that, I write up what's going on in the markets. Every Saturday I look back, and every Sunday I look forward with a focus on index options and volatility. And I'm going to start doing something new that I'm not going to talk about right now in January.
No more Disney Plus. No more Loki for you, Mr.
No more Loki for me.
In the meantime, check him out on Twitter at Russell Rhoads. 2 S's, 2 L's, Rhoads. He's got to spell it fancy. All one word over there on Twitter. And Mr. Rock Lobster, where can folks follow you on Twitter? We never talk about that, but he is on Twitter. And then B, where should folks go if they want all your goodies?
Yeah, I think, let's see, I'm at Option Vol, and I'm on AT Giovinazzi, I think. I got 2 Twitter handles. Either one, I believe, will work. I do tweet out some goodies every once in a while, although I retweet all the shows I do here and all your shows religiously, and maybe anything cool Russell says. So, all right, anything I think has some value, I will retweet. And yeah, optionpit.com. If you actually want the trades and see how I do all this stuff, you got to sign up at Option Pit. Although I do share some stuff on this show, all the real good goodies are behind optionpit.com. Any one of my products are kicking ass this year, so feel free to join them, and you'll be like, oh, wow, you can make money trading these option things if you know what you're doing. So there you go.
There you go, optionpit.com, the place to go to learn more. Give them a follow on the old Twitters as well, at OptionVol. Some fun musings there from time to time. Also a lot of retweets. That is going to do it for us on the network today. Like I said, back again in a little bit for Options Oddities. You can find that on the Pro if you want to learn more. Then back again on Monday for the old OB, and all the way through till next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.